Testing 1 2 3. Testing 1 2 3. 1 2 3 4 5. All right, hey, good morning, everybody. Welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. I am here to earn your loyalty and respect. We do so through these webinars where I do my best to help you become a successful Forex trader, not by telling you what to do, but by teaching you how to think and analyze and make decisions on your own. They also earn it through competitive spreads, fast execution speed, world-class customer service. What more do you need for your successful Forex trading business than a prime broker that loves you? Because we love you. Please visit TradersWay today. Do these sessions 7:30 a.m. a couple hours before the New York Open. It's approximately London lunch. It's a fantastic time for currency traders to get together as a community here at Forex.Today. Thank you, Forex.Today, for hosting us. Thank you. So what's going on, everybody? Everything good? You look good. Graham says, do I trade grains at all? No. Oh, yeah. Henley wants to talk about South Africa. Yeah. All right, so when's the discussion? It's like in a half an hour, 20 minutes, right? Isn't there like aren't they debating today or just discussing, or what is it? Oh, so there's like a vote, right? Well, I thought there was a discussion. So anyways, Zuma's been, what do they call it? Like there is a secret vote, right? But anyways, it's not impeachment. I think they're, what do they call it? Not incompetence. But anyways, they're trying to get rid of their president. I think specifically for firing the finance minister or whatever a year ago, right? Oh, the 8th non-confidence vote. Can you imagine, like, what happens? You're like, yeah, I didn't like the guy. I thought he was incompetent the last 7 times. But now, really having gotten to know this guy, he's definitely competent, and I'm confident in his competence. So I'm really glad we looked 7 times. Like, it can't possibly get better the 8th time, right? So I thought there was a bait, like, you know, politicians, like, they're master debaters, right? So they're going to get together and talk before voting. But anyways, I think it all goes down at 8. I think they've already done whatever they need to do, and then they're going to discuss. So, and I think the general consensus is Zuma so bad, not only do you get 7 no confident votes, or no confidence, votes, going on 8, but if the president of the country gets kicked out, for lack of a better word, the currency's going to surge. That's bad, right? Right? Hey, we just lost the president. No one's running the government. There's total uncertainty. Oh my God, that's going to be so much better. So anyways, watch for that anyways. I don't know if you trade Rand with another broker or not. But good opportunity to make money, good opportunity to lose money. Yeah, Zeal says, depends on how you look at it. True. True. And I'm an outsider, so, you know, I don't have the right to even express an opinion. But my opinion, from having been in Johannesburg at least, is that South Africa is a great country with wonderful people and culture, and it deserves much better. Now, I don't know whose fault that is, but the good people of South Africa deserve something better, and I think they've been waiting a few 100 years for it. So maybe it'll be me. I think maybe I should just take the bull by the horns and just, I'm going to go for it, guys. I'm going to run. All right, so that's that. That will be interesting today. Sean's like, big gold mine there too. Yeah, lots of other things too, but yes. But Sean, that's like saying, oh, you know, there's oil in Texas. Man, it's that big. Yeah. They have gold, right? Yeah. There's oil in Texas too. Oh yeah. So yeah, you got to watch South Africa. It's wonderful. It's a wonderful natural resource country. Faux show. Okay. What do you want to do? Well, let's review. Nothing happened yesterday. Nothing happened yesterday. Let's see, oil. OPEC meeting yesterday and today. I think it continues today, right? It's all week maybe. And, oh, nothing's happened in oil. Hey, who says you should probably not be trading August? Right? Look at that. Nothing's happened. Like, we're talking 50 cents a day. You know the scary thing is? Like, this is 50 cents worth of action yesterday. There was a time in my life when I traded oil a fair amount. Let's say every day. And I'd make $1 or $2 or $3 in a couple of minutes. Like, no joke. I could make or lose $1, and I mean $1 in the price of oil, in the time it took me to, like, close my trade. Sometimes it'd be seconds. Can you imagine? So all of yesterday moved 50 cents. What if it moved $1 in 1 second? Can you imagine the difference? I click the button, I'm like, oh, $1, $2, $3 profit, get out! Please! I'm gonna out! Oh, woo! What did I get? What did I get? And I'd look at it, oh, only $2. I thought I had 3, I clicked it, oh, but I only got 2. But still, not bad. Like, seriously. Those were the days. You know, Forex was like that too. You know, have you ever heard like Forex is this wild and crazy thing? Super, super crazy, super, super risky. Has anyone like heard those stories? And I'd say that is by and large true 10 years ago. Even longer than that. Yeah, probably 13. Probably more like 13 years ago, that was true. Maybe even 10 years ago. But by 10 years ago, it's calmed down a lot. Okay? So like, for example, non-farm payrolls. You've probably traded the non-farm payrolls with me, I'd say at least a dozen times. Some of you, many more. What does it do now? It moves what, 50 to 75 pips? Sometimes retraces. Now, 10 or even more years ago, non-farm payrolls would jump 300 pips in the first couple of minutes, then maybe drop 400 pips, and then rally back up another 200 or 300. So in the course of an hour, it's theoretically possible for you to have made 1,000 pips. Because you went long, then you went short, then you went long, and then you went short. And an hour goes by, and you're like, yeah, I made 400, 500, 600 pips. Or lost 300, 400, 500 pips. Now it moves 75 and stops. And that's a big NFP. So that's sort of the world, how the world's changed. Or like me, clicking a button to get out of a trade, and even my slippage was $1. Now it moves $1 a day. You know, $1 in oil is a good day. Well, that was like a bad second at one point in the world. So what's happened is the market is much more mature. There are many more market participants. You know, even your neighbor across the street's probably trading options. So anyways, look, nothing's happened. Great. So yesterday, let's be less facetious because this is a 4-hour chart. Yesterday, we were in this buy zone. We talked about it really. I identified the low and the high and just said, you know what, just stay away. But if you're a swing trader, that's a clear entry yesterday. And I believe we talked about that yesterday. And then up in here, this is a clear area up here just based on pivots. But if you're going to use, you know, price action a little bit with it as well, because you can see, if I can grab this. All right, well, it won't let me. All right, you can see there's this stuff over here, but you could real body that sucker. But it's, you know, so it's not even using hardcore support and resistance, in my opinion. To me, that looks pretty secondary. So, you know, be careful. So have I traded grain? No, but I did help someone that traded grain as a grain elevator operator in Canada. And back then, he was surprised how well what I teach works for wheat. What do you think about pig? Well, I believe, and correct me if I'm wrong because it's okay, we may have talked about selling off the moving averages. Maybe, you know, kind of thing. Not much more going on. That ruins the party for the bulls. But we got an oscillator rollover, 5/8 cross, and all that kind of stuff. Sure would like to see a lower low. This 786 doesn't convince me we will get one. This could be the quiet week of the year. Or no. There's not, as you remember from yesterday's presentation, there's not a lot on the calendar this week to free up this the stuff. I think this is another example. If you're a bear, you just know, because you can see I'm extending from the left, you just know this is a sell zone if you're a bear. I mean, it's last week's high, last week's triple top, the week before's bottom. Very, 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 very clear trade zone. This is currently this bottom, and you might like it because it's a support pivot, but what should be in play is this. If you're a bull, you really want this to work. Okay? Because if you're a bull, you're going to say, look, if it dips down to support, support will probably hold, but the market will still not be bullish. Even if it doesn't make a lower low, it won't be bullish. It'll be neutral. So a bull isn't really surprised it's coming down here, but a bull is probably hoping for this. You understand the difference? That if it comes down to here, that's not bullish. It's not bearish either. Everybody got that? It's a big difference. It says an amazing amount of information. Know when to hold them. Know when to fold them. It's sort of like watching somebody bet in poker. Right? Right? There's a king on the flop. And someone doesn't bet low, someone doesn't bet high, they just bet sort of same. Usually a low bet is a sucker, a high bet might be a sucker, or he's got it, he's got a king, you know, a king 10 or something. And you're like, you got to be careful, but I don't know. So down here it's sort of a tell. The market's not bearish. Market's not bullish. You guys okay? You're quiet. It says 3 daily. Yeah, well, because nothing happened yesterday, right? So your dailies are probably tight. Yeah, that's cool, guys. Right on. 3-2 Fibbo, so wait mode. What are you talking about? How far back are you looking? You must be fibbing that bottom to this high? I don't know if that's what you're doing, man, but if it is, let me comment, even if it's not. You wouldn't fib that because you didn't get the low. It's not continuation. So we're just in this is all I'm highlighting. I don't know if this is a better point of view to help. I don't know how much you remember of your setups. But I'm suggesting that we're probably going neutral or up. That's all. So, like I said earlier, it might do this, or it might do this. Okay? There's a lot of headway this way too, right? So here's an interesting thing. If you don't mind me, since nothing's going on, let me make some stuff up. One thing about fractal geometry is that we're looking at an hourly chart, but what about a daily chart or even a weekly chart? What are those guys doing? They see this move too, right? So let's say we have a retracement now, and it comes down, it comes up, right? Hits the weekly target, comes down, maybe hits this monthly pivot, and then what? And that's where Elliott wave comes from, really, I believe. And this is somebody else's either 50% or 382. Right? So what happens is it fades back up in August, and September they just take it back down. Oh, I absolutely do, Sean. Oh, I absolutely do. Your Fibbo was made daily low and high of day low. But I still don't see a 382. Yeah, Fibbits. I used to use something called Fibbits. That was on the old Dealbook 360. I don't think the world has Fibbits yet. The world is still figuring it out. So maybe when I'm an old man or dead, people will say Wayne McDonell's Fibbits were genius. He was the Elliott wave of his generation. Who knows? Probably nothing. I'll get nothing. So the only way I can see this is you're saying it's a 382, but it's not a 382, it's a 618. Which tells me you're using my method of using Fibonacci, but you haven't changed your settings. Because I don't know if you know this, but I draw my Fibonacci study upside down. So if you leave the Fibonacci study the way it's default out of the box, this would say 382. This line where it says KKKKKKKK. It's not the 382, it's a 618. So maybe that's what it is. You say it's a 382, I'm like, I don't see a 382. Oh, the 618. And then I realized my 618 out of the box would say 382, but it's not 382, it's 618. And that's because I draw them upside down. And I'm self-taught, so 100 years ago when I was teaching myself Fibonacci studies, there were no books. So I'm like, what are all these studies on my platform? And so anyways, the way it was designed was that you would draw one way to find a Fibonacci retracement, and then you'd have to draw it another way to find the extension. I just found it really confusing. Why shouldn't I just draw it one way and have it at the same time give me the extension? So to do that, you end up drawing the study upside down. And then if that's true, then this line is a 21.4. So one other thing that I do that nobody else does is I have a 121.4 Fibonacci extension. That's this first line right here. Okay, and if anyone else, if you've been taught that by anybody else, they were taught by me. And I kind of see this in some other things every once in a while. I'm like, wow, that dude's doing my thing. But I've taught enough people now. But I was trying to teach myself Fibonacci. And I noticed that 786 was important. Okay, 78.6. So what I did was I did 100 minus 786, and it got me 21.4. So I said, well, my extension should be the same ratio, if you will, as the 786. So the distance from this 100% line, or zero line, let's say, to this line is 21.4. So if I take that distance and I take it from the 100% line and I go up, that distance should be equidistant to this, which would be 100 plus, instead of minus 21.4, 100 plus 21.4, and that gets me this line, the 121.4. Okay, so then I start doing all that kind of stuff, which is great. But then I realized, for some reason, the stupid Fibonacci's default setup calls this a 382. It calls this a 618, which of course is backwards. 50% in the middle is going to be 50% no matter which way you draw this area. Most people do it the other way around. So I go into the settings, and I change the 618 to the 382, and I change the 382 to the 618. And what do you think, if this is set to 21.4 in the actual settings, what do you think it should read? If I was going to change what is stated here. What is 100 minus 21.4? $786, because this line here is, the way that we use it, our 786 line. So you got to go like this. Fibbo properties. You see this it's actually set. It's actually the 3A2. What's the opposite of the 3A2? 61.8. Okay? Let's leave that. Okay, the 618 is going to need to read 38.2. What else we got here? That's fine, that's fine. You know what? I'm going to kill that one. Nobody cares. Fine, fine, fine. I'm going to kill that. What else is here? 50% is going to be 50% no matter what. Cool. And this is wrong. 0.214. And I'm going to describe it, and that's the part that's actually written that you see as 78.6. And I say bingo. 786, 618, 50%, 382. And that's how you do it, bro. So when you say, oh, and it's down to this line, it's a 618, not a 382. So you need to change your properties. Just display what you see here as a reminder. Okay? And it's only because I'm self-taught, but I'm also an entrepreneur, so I question everything. And I said, okay, I see how people use it, how everyone in the history of this indicator uses it, but that's dumb. and I did it my way. I did it my way. Like Frankie said, I did it my way. All right. So that's that. There's nothing going on. Well, you going to trade Asia today? So look at USD CAD, did nothing. This is the role reversal we talked about yesterday. If you were a buyer, not a burr, not a burr, a burr, not a bear, that's your role reversal to the up. Yeah, probably not, Peter. I mean, no, probably not. So look at, do you think there's billions of dollars that haven't been moving the market for the last 24 hours, but they're all sitting on the sidelines waiting for Canadian housing starts? They're like, I'm coming back from vacation just to do this. I've been holding on to my billions because I need to know how many permits have been issued in Canada. So your guess is as good as mine. That's where my guess comes from. Look at this. Look at the Dixie. This is the Dixie right here. It hasn't done anything since Friday. The dollar, the reserve currency of the world, hasn't budged. Hey, did we talk about this yesterday? Frankie said it did it my way. There's a midpoint in here, though, isn't there? Let me just draw it like this. Right? Frankie's in the Yeah, this is right. We called it neutral, right? I don't need no stinking Bitcoin. You can have it. So this is the only thing that's really moved, huh? We were at the double top yesterday, weren't we? I said if it's going to go down, it should go down. If it doesn't go down, I'm not interested. Should go down. If it's going to go down, it should go down here. If it doesn't go down here, I'm not interested. So it's trying, it's doing something, but I think August is a skip month. Yeah, we can do some Kiwi. I just want to live while I'm alive, 'cause it's my life. This was gonna do with it all bit party. If it does do bit party. I don't want to be another face in the crowd. All right. So on the 4 hour, it hit the target, stopped. Thank you, Kiwi. I really appreciate starting at the weekly central and dropping to the target and stopping. Great, thank you. And then resetting off the 4 hour. Problem is, if it hits the target too early in the week, you're going to get a counter trade set up. Beautiful. So, if you hit your target on a Tuesday, if you give them a moose a muffin, if you hit your target too early, then you're going to face the possibility, not probability, of that. I don't want to be another fish in the crowd. So I don't know, has anybody predicted this move to the downside? Who remembers when I said, don't be surprised? Does anybody remember that? Like, yeah, look, it's up 1,200 pips. Don't be surprised. Right? Remember that? Don't be surprised if this comes down. Well, it's only been down 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row. Could be interesting. Yeah, and it's tonight's Asia session, though, isn't it? Or is it tomorrow's Asia session? I think it's tonight's. It's weird because we're all in different time zones. Tells you something about the yen, huh? Yen's getting some strength. So it kind of goes back to conversations we've had before, because I bet you were surprised when I said it. Then I bust out this chart and I go back and I'm like, well, this is a top. The thing about support and resistance, guys, is you should always, 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 always assume that support or resistance will always, 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 always hold. How could you possibly look at support and resistance and think it's not going to hold? Because then by definition, it's not support and resistance. So if it's clearly resistance, let's just measure this. If it's clearly resistance, then your job as a risk analyst is to prepare. So if that's resistance, then in your mind, it's going to hold. So you either take profit or you sell. If you don't think it's resistance, then why would you mark it? So let's zoom back in on a 4-hour chart. There's our resistance. Held, 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 top, down, 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 down. You know what, I'm going to put it back. I don't want to be another face in the crowd. You're going to hear my voice as I shout it out loud. There you go. You think I should plot this just in case? Yeah, me too. Looks like our weekly bottom. How about this? Wait for it. How does that make you feel emotionally? Is that helpful? Just talking it through, right? So now you're using Swissy against it. This looks different, doesn't it? So it appears to me that it's mostly yen strength that's going on. Feels different, doesn't it? I guess you could even go make that the bottom. $382 predicts a 1618, so 75. It's my life. What do you think? It's plausible. A positive outlook from the RBNZ would certainly help my case. Hey, to be hey, no, I'm not sure what site they used, but it's just a web-based chat site. So just Google web-based chat. I can look it up for you later. I've been so super busy. Like yesterday morning, for example, I was up at 3:45 in the morning. And you're like, that's a long day, Bubba. Bounce at the weekly ML, yeah. Yeah, sort of, Peter. So there's some hope there. So I don't really know what more to do. Questions? I mean, nothing's happened or nothing is happening. And we expect this to be the slowest time of the year, so it's not really a shock. Yeah, I used to do that a lot, Peter. So my story one time is, so I used to trade, like I said, oil and gold and stock indices along with currencies. And then I got my tax bill. And I am not joking. My taxes were a book, like hundreds of pages. I'm like, what is this? Like, oh, well, didn't you know? I'm like, what? Didn't know what? Oh, in the United States of America, they have different rules, regulations, and taxation for currencies, different rules, regulations, and taxations for commodities, different rules and regulations for stock indices, different rules and regulations for purchasing stock and selling stock. And I'm like, what? They're like, so we basically had to do your taxes 7 times. MRC, it sounds so ridiculous. I don't even know where to start. Why? I mean, how about like this? Why? Yeah, let's just talk about this. MRC, got info about the Wall Street crash coming this October. All right, good. Why? Just help me out there. Why? Why would it crash? Because the economy is doing well? Russian-U.S. tension. Just, all right, where have you got that? Just honestly, just stop hanging out with these people. Delete it from your browser history. I mean, it's just ridiculous. Well, just like, why would it? The bond market's starting to come down. The Fed is slowly going to raise interest rates. But what's the inflation level of the United States right now? Well, let's just talk it out. We're economists now, guys. We're economists. Just let's talk about facts here. No, don't even define that. I don't even care. I'm so past that already. Let's just talk. We're economists. What's the inflation level in the United States right now? Give me a rough number. Come on. Don't Google it. If you're Googling it, then you got problems. We've just identified a problem of yours. You want to be a player in the industry, except you don't know the basics. So you got to get involved. Yeah, okay, less than 2%. What's the inflation target of the Federal Reserve of the United States of America? Okay, so as long as we're floating 2% or less, what should, if the Fed just normalized today and just put interest rates at exactly where they should be, where should that be right now? Yeah, right around 2%. Well, no, they're normalizing, but it can't be higher than inflation. What's GDP growth right now in the United States? Give it an annual average. Everyone's Googling. Look, about 2%. No, you can have up and down quarters. It's about 2. Growth is just about 2. Where's inflation? Just about 2. What's the Fed funds futures target set by the Fed? 2. So, in my humble opinion, we're going to be at 2 for like ever. Because they are raising interest rates, which will kill inflation, which will keep interest rates going higher up. And they're unwinding the bond portfolio that they hold. And they're going to give a glide plane, by the way. No, it hasn't been announced yet. But they're going to announce a glide plane for their unwind. And all of this is designed to keep interest rates in the United States at 2% for like forever. We can talk about that, Peter, but you have to put $10 in the slot. Put $10 in here and I'll tell you. Yeah. So, do you know what that means for like the stock market? That for the next 5 to 10 years maybe, let's say, how about just for the next 5 years, interest rates will be less than 3, probably closer to 2. Is that going to like drive American business into the ground? That money is going to be cheap and available for years and years and years for the foreseeable outlook? That's going to kill the stock market? Where's MRC? There he is. Mark. Yeah. Doesn't it? But this is what, okay, now maybe I'm wrong because I can't see the future as well. But like, I'm just looking at that like, the economy here is pretty good. You know, I was at a party over the weekend, and the dude's like, oh, you got a Panerai, he's got a Breitling. You guys like watches? I'm like, He's like, well, how many watches you got? I'm like, He's like, oh, well, and then he starts telling his story. I went to 7 shops in Italy. They just didn't have this one. So the normal size is the 44, and the other size is the 42, but this is a 43, and it had to be blah, 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 blah. And then he's like, what about yours? The Breitling, blah, 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 blah. I'm like, dude, are we just having this? Like, what kind of conversation is this? But, like, this is what my neighbors are talking about. I'm like, what? Oh, and you should see my Porsche. Oh, I got the ceramic brakes. Blah, 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 blah. Look, dude, America's back. Did you see like this month, Americans have more debt on their credit cards now than they did the pre-crisis? Okay? They've racked up more on their credit cards now than any point in history. The dollar is weakening. Interest rates are going up. All of this is good. Oh, well, all this points to the end of the world. Well, you believe one or the other. Americans, the stock market is at an all-time high. Interest rates are going to stay low forever. Look, put it this way. If you're a business, it's easy to get money and it's cheap. Right? Let's say you have 10% margins, it costs you 2% to borrow money. Everything's fine. Your customers are buying crap on their credit cards because they have good jobs and they anticipate having good jobs for forever. Their houses are going up in value. Right? I go to parties and they talk about watches. Okay? Like, oh my God. So, look, things are good here, and people are going to keep spending money on the credit card. Businesses are going to have income. They're going to need to want to expand. They need to borrow money. Money is available and it's cheap, so they can do the borrowing to expand. Economy of scale lowers costs. They can lower prices. It's going to increase more spending. More people are going to have jobs. There's going to be a lack of people because we're already at full employment. Wages are going to maybe kind of tick up, but this is a globalized world. So if wages ain't going up in China, then why should they go up here? But a crash? Who the hell is talking about a crash? Why? Because interest rates are inverted? No. What do you mean interest rate? Look at the yield yield curve, right? Right? So when someone says, oh, the end of the world's coming, I'm like, did you look at the yield curve? I don't know what that means. I just know the stock market's at all-time high and it's going to come crashing down. Everyone's going to get out of it. Really? Why is that? The Fed's scaling out a bond market. We're at like, not just an all-time high, we're in a reverse avalanche of bonds that were completely manipulated by the Fed, and now they're going to unwind them slowly. The economy is growing at a great rate, but not too fast. So we have low inflation, but steady growth, full employment. Why would it crash? I'm like, why? Oh, well, the dollar's collapsing. No, it's not. We're investing into Europe, bro, because we bought everything in the United States. So now we have so much money, and we're so filthy, stinking rich. Now we got to go to Europe and buy their crap just because it's cheap. Right? It's not the dollar collapsing. It's because look at it. Look at the dollar throughout history. When it weakens, it means Americans are filthy, stinking rich, and that rich foreigners have invested into America, and they're withdrawing their profits so they can get filthy, stinking rich other places too. End of the world. How many watches you got? You like watches? How many you got? What'd you drive, huh? I got a Porsche 911S Turbo Cabriolet. What do you drive? I'm like, easy go. I got the speed chip in it though, bro. That thing hits like 12. Regenerative brakes. Yeah, I got the 8-inch wheels, bruh. Yeah, thinking about putting in a Bluetooth. Boom! Oh, cabriolet? It doesn't even have doors, bro. It's the bomb. Thinking about getting 2, man. I need 2 golf carts. So anyways, those are my neighbors. It's a true freaking story. I'm like, what kind of guy goes to 7 watch shops in 3 different cities looking for a stainless steel Rolex? Right, Sean. So anyways, guys, just be careful what you're reading. Like, stop this, right? Stop reading crap. This is what I'm trying to teach you. The only thing you should read are economic reports released by government or institutions that are respected. Like, I like the National Association of Realtors. They have great stuff on their website. Now it's a little tinted and stuff because it's always a good time to buy, right? Great, fine. But they have great economic data. For example, central banks, get lots of information from central banks, right? The only thing that you should care about is CPI, PPI, not even PPI, just CPI, PCE, that kind of stuff. GDP is a little slow and backward looking. Every time there's a central bank that wants to talk or release something, you should be there and listen. You should go to all their stuff. IMF's fantastic. There are 2 reports per year. The World Outlook, whatever it is it World Economic Outlook? Yeah, you got to read those. But this is where you get your information, and the only opinion you care about is yours. Did you see the guys that during the dot-com days, when the stock market went to all-time high 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 to all-time high? Meanwhile, there's people who are like, it's the end, it's the end, it's the end, you got to get out, you should not be in this, you should not be here when your mother's not at home. Wow, I went right into Dr. Seuss there. And then when it crashes, they're like, aha, see, I told you. You're like, yeah, well, if I listened to you, I would have missed the last 8 years of a rally, right? So, there was a time in my life when I said, that's it, I got to get out of everything. We need to get out of the stock market. We need to get out of the, we got to sell our house, like now. Was it because Jim Cramer? Or something on Bloomberg? Was I reading a web page with some dude that was babbling about the end of the world? Dr. Doom? Who made me essentially sell everything I had and get the hell out? That's right. Intelligence. So where did I get that? I was doing the work. My own research. Okay? And two parts of it were really important. One, the yield curve. So I knew I had at least 6 months to get up. I knew at least 6 months. And then after that, there was a thing on TV. They were talking about, and this was based on one of the economic releases. And that economic release had to do with home sales, existing home sales. And most buyers, like the majority, and it was high, like 70%, of people that bought homes already owned homes. Which tells me poor people owned 2 or 3 homes. And what were they doing? Refinancing them to buy Cadillac Escalades. 3 years earlier, they were laying tile or putting roofs on. Working at the 7-Eleven, or like in the movie Big Short. Strippers with like 5 houses. How about this? Like my mother-in-law and her husband, they're like 900 years old, retired, no income, no job. They got a mortgage. Like, what do you mean a mortgage? Money was free. But who gives a 900-year-old retired person with no income a mortgage? They're like, well, they gave it to us. Why wouldn't you take it? I'm like, why wouldn't you take it? You would certainly take it. Hey, do you want any money? Okay, I'll take it. Right? I mean, think about it, right? So it was those two things. So basically, we dumped everything, dumped the house. We had like 8 or 12 offers in the first day, 4 of which were higher than asking. One of which was like closing in 15 days cash. Here's cash for your house. It'll just take 2 weeks to do the title. You don't even have to worry about the bank and all that kind of stuff. Here's cash, more than you're asking. 15-day close. We took it. Moved to Georgia. Actually, I flew to Georgia within that 2-week period. Flew to Georgia, looked at 8 houses, bought a house, went to the store, bought $25,000 worth of furniture, had it delivered to the house, got back on the plane that same weekend, flew home to my wife. I'm like, yeah, I bought a house. It's furnished now. It's good. So we took our baby. She was still nursing. And we had a 1-year-old toddler. Boom. We're out of here. Like, no joke, weeks later, the housing market in California crashed, and about several weeks later, the stock market crashed. And I was in Georgia worried that it wasn't going to crash, so I got it that early where I'm in Georgia. I'm like, damn, it ain't crashing. Guess what? It crashed. Ha! Ha ha! Right? So, note I didn't listen to anybody on TV. What was it? I looked at the economic data and I made a decision. So I'm willing to listen if someone says, great, October 2017, the market's going to crash. Great, cool. Show me the research so I can make a decision. And usually there's no research. Where do you get, guys, if you want indicators, you go to Codebase, right here. There's 10,000 indicators, okay? And if I want a precision trend indicator, I either download it or double click it. And you can download it that way. Okay. I thought there was another way. I think you just drag it into your thing. Maybe it's just that one. Okay. But that's how you do it anyways. So you have anything you want. So you're like, well, dude, I'll have to spend hours going through all this. Yeah, well, I did. Yeah, I saw it take off. Yeah. Look, all pivot points. An indicator for drawing all important pivot points, including classic, Carmela, Woody, floor, Fibonacci retracement. Oh, great. Cool. So there you got one. Higher time frame. An indicator that shows higher time frame candle on current time frame. Yay! So you spend hours and hours and hours, just thousands. Whatever you want, bro. Groove. So I think that's it. So yeah, so that's where I want you to get, like, so you never have to listen to any idiot ever again. Okay? Ever. Because it's so distracting, and you'll inadvertently drink the Kool-Aid. Even if you don't think you're drinking the Kool-Aid, it's going to be in the back of your mind. Like a tick that's crawled through your ear while you were sleeping. Yeah, at least make your own mistakes, right? Right? So that's where I want you to go. I saw an inverted yield curve, and I looked at the fact that the economy was so unbelievably hot, which means frothy, which means BS money. There's some dude that was poor 5 years earlier now drives a Cadillac Escalade and owns 5 houses, and it's all on credit, no money down. Refi. Yeah, you know what? Interest rates are going to be high, and that's going to kill margins on corporations. They're going to lose their profitability, and they're going to have to lay people off, even if spending stays the same. But if any of this goes away quickly, all the fake money is going to dry up, and then we're all going to be in a world of hurt, so maybe I should get out now. Okay, that's where I want you to be, guys. The people turn to you for answers, not the other way around. So you can just stop reading everybody. Just everybody and everything. You don't need to read them. You're the expert. People read you. People come to you for answers. MRC, what should I be doing? Help me. Help me, MRC, help me! I don't know anything about Bitcoin, Hadir. Sorry. Yeah. Seriously, though, right? What would I do without you, MRC? Thank you. You saved my family. Yeah. I named my baby after you. This is baby MRC. Yeah. So, master of your own domain, right? So, peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow. Hopefully something happens. Thank you for being on my team. I'm sorry the market's slow, but I told you 6 months ago. And most people are going to start complaining. Most people are going to tell you this is a terrible time to be working. This is a terrible time to be in front of your charts. You can't make money in the summer. All that kind of stuff. And 90 days from now, we'll be laughing our ass off. And the reason they believe that is it's true. They can't make money in the summer. And we can. Just not today. We're getting prepared. We're going to be there when the time's right. And they're out doing God knows what, walking through Disneyland. It's 95 degrees Fahrenheit, 95% humidity, 3-hour lines for everything. The food is overpriced. There's kids everywhere with their filthy, nasty germs and their stinky smells. And you're like, dude, I only dropped 10 grand on this vacay. It's awesome. And tomorrow we'll go see Harry Potter. And 100,000 people are going to fit into a street and it's crooked. And it's going to be so good. And we'll have lunch. It'll only take 2.5 hours. It's the greatest thing ever. Meanwhile, we'll be setting up our trades. To them, right? I love you. You're crazy. See you tomorrow.